Hey, so it's been about 2 months since I funded my account with $1,500 in E-Trade, and I announced in my last YouTube video that I have a 1 year challenge to turn 1,500 into 40,000 in 1 year trading stocks. So now this is week 1 of that challenge. So in that time, I only did one trade, and the trade resulted in a big loss. I lost 29%, and right now I have been so now since the 2 months when I started my trades and funded my account with 1,500. After all my losses combined, my account is down about $400. So I have like $1,107 now, and I've been only betting 20% of my account until I can have a green month going and averaging about 10% without having a big loss greater than 10%. So if I can have a green month like that, then I can start to go all in. And if I continue to average about 10% each week, starting with $1,500, I can in 10 months grow it to over 40,000. So the first part of the challenge then is to have a green month going only 20% of my account, betting that only on positions, and then if I can average 10%, then I'll start to go all in. And now, I know though I am seeing some improvement, because if you watched my last video, you will see that there was a 2 week period where I didn't have a big loss, and I made like the first week, 1 week I was up 14%, and the next week I was up 12%, and then the next week after that I started to kind of have a big loss. I was down 11%, and now I did my big loss, 29%. So anyway, I do see some improvement in controlling my emotions, because I was able to go 2 weeks without having a big loss. And so this is a learning process. It's going to take time for me to learn how to control my emotions and staying disciplined while trading. And now so yeah, it's just a learning process. So I might have to experience for some time a few more big losses, and I should eventually, as time passes, I will learn how to control my emotions better. That's why the test to see for me if I can feel like I control my emotions will be that month. I need to have a green month going only 20% in without big losses. Then I'll feel confident enough to start going all in and feel like I can control my emotions. Okay, so now I will get into my trade. Okay, so this is the trade alert. you can see I just made a trade on Monday this week, and then that's it on 4/22 on the ticker RHE, and you can see I lost $1 a share from where I bought and then when I sold. And then, as I said, my account balance from when I started, from when I funded it with 1,500 about 2 months ago, now I'm down. That's my balance there. Okay, and this is an E-Trade. And now, so this is the chart. Now, and so I bought just about before 9 o'clock. You could see the green circle there. And then you can see where I sold the red circle down close to like 11 o'clock. And that was resulted in a 29% loss. And so but as you can see, I did have some time to sell, close to 3 and even a little bit above, even above 3. So, but I was holding it, and so you can see though that didn't have to be a 29% loss. And so now the mistake in the besides not cutting my loss quickly, the mistake that I made buying here was that this stock, first of all, when it did have some news, and then when the stock opened at 6:30, the stock pre-market, and then from its previous day's close, and now when it opened, it already went up like over 100%. So we call this an overextended gap up. And usually when there's some news announced and the stock already spikes up 100%, there's probably going to start to be a big sell-off, especially if there was like 6 months ago, or let's say the stock was around a certain price and then it dropped a lot. We might have some investors who are holding in through those months because they don't want to sell for a big loss now, and then when the stock suddenly spikes around where they bought or over, they're going to sell. So that adds to the selling pressure. So anyway, so it was an overextended gap up, and then if you can see right at the morning around 6:30, you can see the volume, the gray bars represented by the gray bars on the graph, they were taller, so it means that there was more shares traded when it did its first morning spike right out of at 6:30 California time when the market opened. And then when I bought, although it was uptrending, but you notice the volume under here was significantly lower than the volume, where it spiked and it went above 3. It was like above 360 there. The volume was a lot higher. And so where I bought here, thinking that, okay, it might test its high of like 394 again, I should have waited to see that, okay, there, like, let's say if I got another big green candle that went from like 340 to 370, and then we can see that the volume bar was, just about as tall as it was in the morning, then that would start to look like, okay, it might break its high of day and continue to go up. But otherwise, where I bought here, So I bought near resistance, and then in the morning there, I can say that it has heavy intraday resistance. Since the first morning spike, the volume was a lot higher than where I bought. I can say that resistance is heavy resistance because the volume is higher. So the main mistake here, I bought an overextended gap up with heavy intraday resistance. Okay, and then I kind of missed when it started to break from, we could see after the dip, and then when it went to like back over $3, I missed that because if I was watching the stock and it spiked, so if since the opening price I think was close to $3, and then when it went below the opening price, we can say now it's red on the day, and then when it went back to turn green on the day, when it went above its opening price, that would have been a much better buy. If I can say, okay, it's turning green on the day again, so if I was watching it and I bought around $3 close to 8 o'clock, I can risk, like the 280 level. I could say, okay, there's some support there, and then I can say, okay, it might retest its high of day. And if I bought, around 8 o'clock there, that would have been also a better risk reward. I could have bought like at 3 around 8 and risked 20 cents, and to make a potential, we can say like 40 cents, or if it retests its high of day 390 area or more. So anyway, if I bought there, that would have been a better buy, but I missed it. So yeah, those are the reasons then why the trade wasn't a good entry, or where I bought. So each week I'll do another trade recap, and after each week, and we'll see if I can start to control my emotions better. And I'll see you next week then.